everyone, my name is Luberta. I am the owner of Right Tax Professionals, also known as Right Way Services LLC. And I've been getting a lot of questions on child tax credit and earned income tax credit. So I just wanted to kind of break it down to you guys and show you how it is calculated. Okay. So what I have here is a whiteboard. And I want to explain to you guys about exactly how this is calculated. Okay. So first, I'm going to, with this scenario, it will be a married filing jointly with one dependent. Okay, and the dependent is going to be under 17 years old. Okay, so what I'm going to do is I'm going to start with calculating how much they made. This is their gross income, but they don't have any above the line incomes, which would probably be like educator expenses if you are a teacher and you pay for books or supplies. If you contributed to an IRA account and it was traditional, stuff like that as above. So because it isn't any above line deductions, I'm going to make the AGI combine their income, which is $64,000. And since it is $64,000 and they are married filing jointly, I am going to put that they decided to do a standard deduction. And when you standard deduction basically means that this is the amount that will not be taxed. So the standard deduction for a married filing jointly for the year of 2025 filings is $31,500. Okay. So when you separate 64,000, which is the adjusted gross income, from the standard deduction, which is 31,500. Now, I want to say you will have to pick between itemized or standard. And your best bet, if you know that you've been doing contributions, or if you have a lot of deductions because you put your money in certain things that you can get deducted, I would suggest you have your tax professional check out if you will be able to deduct more from itemized than you will standard. Okay. So standard deduction is basically what the government is just giving you as a standard deduction that you can deduct from your adjusted gross income. So if we do 64,000 minus 31,500, okay, let's do that. 0, 0, then 3, 10, 5. So that would be $32,500, which is taxable income. That would be considered taxable income. All right. So if you got 32,500 taxable income, then we have to figure out where you are in tax bracket. So because the tax bracket, we have a progressive tax bracket in the US. That means that they are in the 12% tax bracket, okay? Because we are progressive, it don't just go, you have to actually do 10% of that 32,500. So the 10% tax bracket for married filing jointly is 23,850. Okay? And 10% of 23,850 is $2,385. Okay? Now, what you will have to do is separate. You will have to take what your taxable income is, which is 32,500, and subtract 23,000. You have to take the 32,500 and subtract $23,850. So it'll be 5, 6, and 8. So that will be $8,650 that you will have to do in the 12% mark times That would be $1,038. So 12% times 8,650 is $1,038. So that will actually be, you will combine the 10% and the 12% that you took. So that'll be $2,385 plus $1,038. So that'll be 13, 12, 4, 3. So that'll be $3,423 that is taxable. Erase this. So that will be $3,423 that is taxable. That needs to be, well, actually, that is their tax liability, which means it needs to be paid, right? So let's say in their taxes, they paid, I'm going to say together combined, they probably paid $1,500 each, okay? So they paid $1,500 each. That would be $3,000 that they pay for their tax liability. So that means subtract 3,000 from what their tax liability will be. That would be $423. Okay? So if that's $423, then you will have, because they have a dependent under the age of 17, that is a child tax credit they're eligible for, and then they're also eligible for earned income tax credit. Okay? And see, earned income tax credit per child is $4,328. Child tax credit would be $2,200, which is non-refundable, but then $1,700 of that is refundable. Okay? And non-refundable means that you won't be getting that back. That $2,200, you won't be starting at $2,200 of how much you will get back as a refund. The $1,700 refundable is additional child tax credit. Okay? That is actually refundable. So we're going to go back over here to what you owe now as a tax liability. Okay? Now, since you owe $423, what they do first is always go into what is non-refundable. And like we said over here, child tax credit is non-refundable, which is up $2,200. So if we go $2,200, okay, minus the 423. Well, that is backwards. So I'm going to say, so let's say 2,200 minus 423. Okay? So that would be 7. That would be 8. No, it would be 7. And then this would be 7. So it would be $1,777. Mind you, only thing that is refundable from that $1,200 would be the $1,700. So if that's the case, then they will cross out that $77, and you would be having 1,700. I ain't write that right. It will be, you will actually have $1,700 to be refunded, and that's all because of the child tax credit. And then because the earned income tax credit is something you qualify for because you have a dependent, you will actually add that $4,328 to that. So that will make it $5,028 will be refunded back to you. That is if, and that's just roughly, if you don't have no more